Welcome back to Investing Talk Podcast. We're glad you're joining us for another look into the world of finance. Today, we're zeroing in on a company quite few of you have asked about, actually. A significant player in semiconductor IP, Rambus. And the big question we're tackling is, well, is now a good time to buy? Before we really get into it, if you haven't already, please do hit that subscribe button, maybe give us a like, and leave a comment below. It really helps us out. Oh, and if there's a specific company you'd like us to look into, definitely tell us in the comments. Your suggestions are, well, they're great fuel for these discussions. We've pulled together quite a bit of info to understand Rambus from, all the angles, financials, market position, technicals, what the future might hold. We'll look at fundamental strength, recent news, catalysts coming up, and of course, the risks. So let's get into it.
Yeah, Rambus is interesting because of its position. It's quite unique. They're a leading designer and licensor, right? High-performance memory interface and security IP, not making the chips themselves. And they've got really strong penetration in data center, DRAM, and those AI accelerator markets, which are booming, as you know. So yeah, it's an IP-heavy business, not your typical chip maker at all.
That's a really crucial distinction. It sets them apart. So how does that IP model play out in the numbers? For fiscal 2024, they reported revenue of $501.8 million. That's about 9% growth year over year. But the GAAP gross margin, 75%. That's pretty impressive.
It really is. That's the power of the IP model right there.
Right. And net income hit $144.1 million with diluted EPS at $1.29. Those are strong figures, no doubt.
Definitely. And it continued. Q2 of 2025 showed similar momentum, $134.3 million in revenue. Gross margin actually ticked up slightly to 77%. Net income, $42.5 million. And management's guiding for the full year 2025 revenue between $525 and $535 million, with adjusted EPS projected at $1.36 to $1.44. So continued steady growth expected.
Okay, so what does that all boil down to? An operating margin around 36% for FY 2024. That really signals a highly profitable structure, doesn't it?
Yeah.
Very different from semiconductor peers carrying, those fabrication risks and costs.
Exactly. And connecting that to their overall financial health, it gets even better. As of June 30, 2025, they had $558 million in cash and equivalents. And get this, zero long-term debt on the balance sheet.
Zero.
Zero. Free cash flow for FY 2024 was strong too, $158.6 million, up from $142.3 million the year before. And their current ratio in Q2 2025 was 4.9. That means tons of liquidity, very conservative risk profile.
That sounds incredibly solid, especially for a tech company. No debt is huge. And competitively, their move towards DDR5 and high bandwidth memory, HBM interfaces,
right,
that seems perfectly timed with AI demand, right?
Absolutely. It puts them right in the sweet spot. Now, they do have competitors, of course,
Yeah.
Synopsys, Cadence, Marvell. They're in some related IP segments. But Rambus's specific technology and, crucially, their patent portfolio, that gives them a pretty defensible moat,
Right, that patent protection is key in the IP world.
Okay.
So fundamentally, the picture looks quite robust. Strong margins, no debt, aligned with big trends. Let's shift gears a bit. What about the technical side? What's the chart saying? How's the stock actually been behaving? Looking at the last, say, 8 weeks. The stock's been trading between about $68 and $83. We've seen support recently down in that $68, $70 area. And resistance seems to be up around $80, $85. As of early September 2025, the price is hovering. Maybe $73 to $78. Somewhere in there.
Yeah, and from an indicator standpoint, it raises some interesting points about momentum. The 50-day moving average is around $75. The 200-day is lower at $67. This is as of mid-September. So the shorter-term trend is above the longer term, which is generally seen as positive.
Yeah.
And the RSI, the Relative Strength Index, is currently around 56. That's pretty neutral territory, not screaming overbought, not oversold either, just neutral. The MCD indicator in September, it turned slightly positive, so maybe some mild positive momentum building since late August. And volatility has been, well, moderate, not excessively jumpy.
So putting that together, the overall trend since the start of 2025 has been generally up, right? Even with a couple of pullbacks like in late July and early September.
That's right. A general uptrend, maybe consolidating a bit recently.
Okay, that makes sense. Fundamentals strong. Technicals generally supportive, but maybe not explosive right now. Now, here's something that always gets attention. Insider activity. What are the executives and directors doing with their own shares? We did see some insider sales reported late August, early September 2025. Director Meera Rao sold 3,000 shares at about $71.72 on September 2nd. Director Stephen Lobb, he sold about 2,260 shares at $78.72 on August 29th. And Director Nesib Sainer sold 7,500 shares around $73.50 back on August 8th. And then another 7,500 shares for over $640,000 on September 11th. That last one kind of lined up with, talk about a major product launch. What do you make of that?
Well, insider selling always catches the eye, doesn't it? But you have to dig a bit deeper. It looks like these sales are mostly routine, part of prearranged 10b5-1 trading plans.
Ah, okay. So plan in advance.
Exactly, which means they aren't necessarily reacting to some hidden negative news. And the volumes, while not tiny, are pretty modest compared to the total shares outstanding, the float. So yeah, it's net selling, which isn't ideal, but it doesn't automatically scream bearish warning signal in this context. More like portfolio management.
Got it. That context is important, so
Yeah.
not necessarily alarming. What about Wall Street analysts? Any recent changes there?
Not really, no. As of mid-September 2025, things have been quiet on the upgrade-downgrade front. The most recent consensus we saw from late July kept the average price target around $82. And the rating was generally a hold.
A hold. Okay, that kind of fits with the neutral technicals and maybe the routine insider selling.
It does seem to align, although there has been some recent market excitement that maybe the analysts haven't fully priced in yet. For instance, on September 15th, the stock jumped quite sharply, 11.55% in one day.
Right.
Yeah, likely driven by speculation around new products or maybe some executive moves. Hard to say for sure. We also saw an institution, City Center Advisors, make a new investment of about $263,000. Small, but it signals maybe growing institutional confidence.
Interesting.
But despite that pop, general social media sentiment, retail chatter, it's remained pretty neutral. No big buzz, no short squeeze talk, really.
Okay, so some underlying institutional interest maybe, but not a huge retail frenzy. So looking ahead then, what could actually move the needle for Rambus? What are the potential catalysts we should be watching?
Good question. Short term, the big one is always earnings. Q3 2025 report is expected late October 2025. That'll give us the latest numbers and, importantly, updated guidance. And, of course, any announcements about new licensing deals or significant memory IP wins, those could definitely provide a boost, show continued traction.
Right, and what about the bigger picture, the longer-term drivers?
Well, structurally, the industry's shift to DDR5 memory, high bandwidth memory, especially for AI, that's a massive tailwind for Rambus. That's their playground. Their exposure to next-gen chips and, importantly, data center spending cycles, particularly all the investment going into AI infrastructure, that's a key long-term driver.
Makes sense.
So you'll want to watch for continued innovation from their R&D pipeline, maybe some strategic M&A to broaden their scope, and just solid execution overall.
And you mentioned some specific dates for people watching closely.
Yeah, a few things on the calendar in the next few months. Q3 earnings, like I said, October 25th. There might be an ETF rebalancing event around November 15th. Sometimes those trigger buying or selling. Institutional buying reports often come out around December 5th. And then looking into next year, probably a Q4 earnings preview around January 24th, 2026.
Okay, good to keep those dates in mind. What about, well, rumors, speculation, anything bubbling under the surface?
There's always chatter in this space. We hear whispers sometimes. Rambus as a potential acquisition target. You know, a larger semiconductor company looking to bolster their AI infrastructure capabilities might find Rambus attractive.
Interesting.
There's also general anticipation around possible new strategic partnerships, maybe in AI or edge computing. That could open up big markets. And speculation about new proprietary tech, maybe addressing chip shortages or latency issues, that would be huge if true. Plus the usual rumors about potential big government or enterprise contracts landing soon. You always hear those. But if one hits, it could certainly move the stock.
Okay, lots of potential catalysts, some more concrete than others.
Right.
But every investment has risks. What are the main ones for Rambus?
Absolutely. You have to weigh the risks. Stock-specific ones, highlighted in their own filings, include depending too much on just a few large customers. That's concentration risk. There's always the risk of patent litigation defending their IP or facing challenges or patents expiring. That's inherent in the IP business. And technology obsolescence. Memory tech moves fast. They need to stay ahead. Plus, pricing pressure from bigger, more diversified competitors is always a possibility.
And beyond Rambus itself, broader market risks.
Yeah, definitely. Rambus is tied pretty closely to the overall semiconductor cycle. So industry booms and busts affect them significantly. General tech market volatility can swing the stock around, sometimes for reasons unrelated to Rambus specifically. And then the macro stuff, U.S.-China trade tensions, global chip supply dynamics, shortages or gluts, and any new regulations. Those are all center-wide headwinds to be aware of.
Okay, so we've looked at the strong financials, the supportive technicals, the insider moves, catalysts, and the risks. Pulling it all together, our overall assessment for Rambus comes in at, let's say, a 6.5 out of 10.
Yeah, I think that feels about right. The rationale is, look, the financials are really solid, high margins, no debt, good cash generation, that's a big plus. And those structural tailwinds from AI and data centers are real and powerful. That's undeniable. But near-term revenue growth is, moderate. Steady, but not explosive right now.
Right.
And valuation-wise, it doesn't look like a screaming bargain compared to peers. It's not deeply undervalued.
And the insider selling, while likely routine, doesn't exactly provide a strong bullish signal either.
Yeah.
Technicals are okay, supportive long-term, but maybe near-term upside is capped around that resistance level we talked about, unless earnings really knock it out of the park or a big catalyst hit.
Exactly. So it creates this kind of balanced risk-reward profile. It seems better suited for maybe a long-term investor, someone willing to accept that sector volatility and the execution risk involved in staying ahead technologically. Short-term pops are possible, sure, but maybe limited until the next big news drops. It feels more like a hold and watch or accumulate slowly situation for many.
So for those of you wondering if now's the time to jump into Rambus, it's definitely a nuanced picture, isn't it? You've got strong fundamentals, great alignment with huge tech trends like AI, which offers compelling long-term prospects, but the near term feels more like, well, waiting for a clearer catalyst or maybe a better entry point.
Yeah, and maybe the key question for you to think about is this. How effectively can Rambus keep innovating and defending that crucial IP mode? Can they translate those big AI tailwinds into really aggressive top-line growth, especially as competition potentially heats up? That's the core challenge and the potential reward.
Something to definitely consider. Thanks for joining us for this look at Rambus. We really appreciate you tuning into Investing Talk Podcast, and we'll catch you next time.